Your pound just shrunk, mate. Well, hello there, global citizens and people who just like to know why their groceries cost more. Today, May 21st, 2025, we've got some news out of the United Kingdom, and let me tell you, it's a bit of a spicy meatball. The UK's annual inflation rate, that thing that tells us how quickly prices are going up, decided to do a little sprint. It jumped to 3.5% in April 2025. Now, that might not sound like a marathon number, but it was up from 2.6% in March. Economists, the folks who usually predict these things with fancy charts, were expecting something like 3.3%. So a little surprise there, like finding an extra chili in your curry. This means things are getting more expensive faster than expected. So what's fueling this sudden price hike across the pond? It seems like a few usual suspects are to blame, and they've brought friends. Energy costs are up, water bills are climbing. Getting from A to B in terms of transportation is also costing more. But hold on to your travel pillows, because airfares took a particular leap, soaring by a staggering 27.5%. Yes, you heard that right. Suddenly, that budget flight to Ibiza is looking a bit more like a first-class ticket to, well, somewhere much closer. And it's not just travel, the costs for housing, those essential household services we all rely on, and even recreation and culture are also pushing the overall inflation figure upwards. Basically, living life is getting a tad pricier. Now let's dig a little deeper, shall we? There's something called core inflation. This is like the main event, without the volatile opening acts like energy and food prices, which can jump around like a kangaroo on a trampoline. This core inflation also rose, hitting 3.8% in April, up from 3.4% in March. So even when you strip away the most unpredictable items, prices are still climbing steadily. On a monthly basis, the main consumer prices index, CPI, rose by 1.2% in April 2025. Compare that to April 2024, when it only rose by 0.3%. That's a noticeable acceleration. It's like your car suddenly deciding it wants to burn through fuel 4 times faster on the same journey. All this economic excitement, or perhaps anxiety, definitely complicates things for the Bank of England. You know, the people in charge of keeping the economy stable, often by adjusting interest rates. They had actually anticipated a temporary rise in inflation, maybe to around 3.7% later in the year, in the third quarter of 2025. Despite this fresh data, the Bank of England had already cut its key interest rate to 4.25% in early May. They've signalled that any further cuts will be gradual and handled with extreme care, like diffusing a very polite tea-drinking bomb. Interestingly, the British pound actually got a bit stronger against the US dollar after this inflation news. Meanwhile, UK Chancellor Rachel Reeves is off at a G7 summit, probably discussing how to navigate these choppy economic waters. All right, let's hop over to the good old US of A. There's always something happening there, isn't there? Today, May 21st, 2025, is no different. The economic calendar is buzzing. Later today, we'll see the preliminary manufacturing PMI for May. Think of this as a health check for the manufacturing sector. Are factories busy, or are they twiddling their thumbs? Then the EIA crude oil inventory report drops. This tells us how much oil America has stashed away, which can swing oil prices globally. And if that's not enough, Federal Reserve officials, including Richmond Fed President Tom Barkin and Fed Governor Michelle Bowman, are participating in a Fed Listens event. They're basically opening their ears to hear what people think about the economy, which is always illuminating. These US economic indicators are watched closely around the world, and for good reason. The manufacturing PMI gives us a snapshot of industrial health, which can signal broader economic trends. If factories are booming, it often means more jobs and economic growth. The crude oil report doesn't just affect gas prices at the pump, it ripples through transportation costs for almost everything. And when Fed officials speak, everyone listens. Their comments can hint at future interest rate moves, which impact borrowing costs, investments, and the strength of the US dollar. Speaking of the dollar, it has actually been on a bit of a slide recently against other major currencies. This is partly influenced by President Donald Trump's recent push for a big tax and spending cuts bill. Meanwhile, President Trump has been busy on Capitol Hill. Just yesterday, he was rallying House Republicans, urging them to get behind his comprehensive tax and spending cuts bill. He's all about party unity on this one, trying to get everyone on the same page. In other Trump news, he also announced the selection of a design for the Golden Dome. This isn't a new brand of fancy chocolate, folks. It's a proposed $175 billion missile defense shield. He's even appointed someone to lead the project. So big plans, big spending, and potentially big impacts on the US budget and economy. These domestic policies often have a ripple effect on international markets and currency valuations. Now let's jet over to Asia, where stock markets were generally having a pretty good day on May 21st. What was driving this optimism, you ask? Well, it seems geopolitical tensions might be playing an unexpected role. A report from CNN suggested that Israel might be preparing for a potential strike on Iranian nuclear facilities. Now, usually news like that makes markets nervous, but in this case it seems to have given a boost to certain sectors. This kind of tension often leads to a rise in oil prices, as traders anticipate potential supply disruptions. And indeed, Brent crude, a major oil benchmark, saw its price increase by over $1.20 per barrel. The MSCI Asia Pacific Index, excluding Japan, rose by 0.5%. Japan's Nikkei 225, however, edged down slightly by 0.18%. It's a complex world out there. Shifting our gaze to the Middle East, there's a lot of dynamic activity brewing, and it's not just about oil these days. The aviation sector, for instance, is reaching for the skies, quite literally. Qatar Airways and Etihad Airways have just placed some massive orders with Boeing. We're talking about a combined order for 188 of the shiny new Boeing 777X and 787 aircraft models. That's a huge vote of confidence in the future of air travel and a significant investment in their fleets. This signals expectations of growing tourism, business travel, and global connectivity. These deals are not just about planes. They represent jobs, technological advancement, and the region's ambition to be a central hub for global transit. Beyond the runways, the financial sector in the Middle East is also expanding its footprint. Global investment giant Goldman Sachs has announced plans to beef up its presence in the region. This means they'll be hiring more people and potentially opening new offices. When big players like Goldman Sachs decide to invest more heavily in a region, it usually indicates they see strong growth potential and a favorable business environment. It's a sign that the Middle East is increasingly seen as a key area for financial services and investment opportunities. And in other news, Kian Canode Holdings, a company specializing in smart metering technology, has secured a $7.5 million loan deal in the Middle East. This funding is aimed at supporting the expansion of smart metering projects over in India. Now, hold on to your digital wallets, because the cryptocurrency market is doing its usual roller coaster meets rocket ship impression. Bitcoin, BTC, the OG crypto, has surged impressively, recently hitting around $107,000. That's getting very close to its all-time high, folks. Analysts, those brave souls who try to predict the unpredictable, are projecting that Bitcoin could reach anywhere between $130,000 and a whopping $200,000 by the end of 2025. What's driving this? Well, it seems to be a mix of increased adoption by regular people and, importantly, more big institutional investors dipping their toes, or rather their treasure chests, into the crypto pool. This suggests a growing acceptance of Bitcoin as a legitimate asset class. And it's not just Bitcoin having a party. Ethereum, ETH, the second biggest crypto, is also looking pretty perky, trading at approximately $3,250. That's a nice 2.8% increase in just the past 24 hours. This rise is attributed to growing investor interest and increased activity in staking, which is kind of like earning interest on your crypto. However, for fans of XRP and Dogecoin, there's a bit of a waiting game. The US Securities and Exchange Commission, SEC, has delayed its decision on proposed exchange-traded funds ETFs for these coins, asking for more public comments. On a more bullish note for altcoins, XRP futures have launched on the CME, Chicago Mercantile Exchange, a big step for altcoin derivatives. And in a sign of real-world adoption, Trump Tower Dubai has reportedly started accepting cryptocurrency payments for property purchases through a platform called Deus Ex Pay. Fancy a penthouse for some Bitcoin? So, after that whirlwind tour of global markets, from London's rising prices to Bitcoin's soaring heights, you might be wondering, okay, Trevor, that's a lot of numbers and news. What does it actually mean for me? Well, let's break it down. That UK inflation we talked about, the 3.5%, That directly impacts the purchasing power of people in the UK. It means your hard-earned pound doesn't stretch as far at the supermarket, at the petrol pump, or when you're booking that much-needed holiday. It's that feeling when you go to buy your favorite snack and suddenly it costs more. It's a tangible hit to the daily cost of living, and it makes planning your finances just a little bit trickier for everyone. Then you look at the US economic calendar and President Trump's policy pushes. These events, like the manufacturing reports or Fed speeches, aren't just for Wall Street bigwigs. They influence global investor sentiment, currency values, and even the interest rates on your savings or your mortgage, no matter where you live. The Asian market movements, reacting to geopolitical whispers from the Middle East, show just how interconnected our world is. A potential conflict thousands of miles away can make your investment portfolio jump or dip. It's a reminder that economic stability is a delicate dance, influenced by a multitude of global factors, from political decisions to international relations. The developments in the Middle East, like those huge Boeing orders and Goldman Sachs expanding, paint a picture of a region actively diversifying its economy and positioning itself as a global player in more than just energy. This creates new investment opportunities and signifies shifting economic power dynamics. And then there's crypto, the wild ride of Bitcoin and Ethereum, the regulatory scrutiny and the increasing real-world adoption. It's a financial frontier. It offers the potential for high returns, but also comes with significant risks and volatility. It's a space that's evolving at lightning speed, challenging traditional notions of money and investment, and it's definitely one to watch, even if you're just crypto curious. Ultimately, staying informed about these global market updates isn't just an academic exercise, it's about understanding the forces that shape our economic realities. Whether it's UK inflation affecting your budget, US policies influencing global trade, Asian markets reacting to distant tremors, or the Middle East and crypto carving out new economic landscapes, these are not just abstract concepts. They have real-world implications for your job security, your savings, your investments, and your future plans. So, keeping an ear to the ground, understanding these trends, even just a little bit, can help you make more informed decisions. Because in this complex global money maze, knowledge really can be your most valuable currency. Stay tuned, folks.